One of the great things about traveling is you get to make new friends.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get your free financial survival toolkit and find out where to buy gold and silver safely at great prices. Sign up at financialsurvivalnetwork.com. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold since 1990, and I'm a customer because when you buy, they ship. To find out more, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. We made a new friend recently at Freedom Fest, none other than aka Turd Ferguson of tfmetalsreport.com. He's with us now. We're talking metals. Hey, Turd, welcome back to the financialsurvivalnetwork.com.
Kerry, it's a pleasure. It was great to meet you as well. And thank you very much for having me on today.
Yeah, well, you're a fun person. I always say this industry needs more fun people and less drips, especially the guys who like to just basically, shall we say, throw water on the parade.
Certainly a number of those out there, aren't there? Yeah,
buzzkills, right?
Yes, exactly. In the end, I think we have to keep everything in perspective. And if you take it all too seriously, it can take all the fun out of it. And so that's how we try to do things at TF Metals Report for sure. We try to take a little more irreverent look from time to time and keep it a little more lighthearted.
I think that's really important, keeping your perspective. And really, when you get down to it, keeping your perspective means keeping your sense of humor, assuming you have one, although it's hard to believe. There are certain people that don't have a sense of humor, you know?
God, and a lot of them are in investments, Kerry, that's for sure.
Yeah. The dour science, I think they referred to economics at one time or another, right?
That's right.
There's some pretty dour people, but at least in Vegas, most of them weren't there. Thank goodness, right?
That's right.
Yeah, so speaking of dour subjects, metals, what is going on with them now? Gold over 1,600. It's up another $12 or so today. Silver is, well, now it's at 1060 according to Kitco. Just to look quickly, silver $27.50, up 18 cents today. It was up higher. Options expiry, as the Canadians say. Sometimes the Canadians actually have terms that are superior to American English. Expiry is one of those terms. So what's going on with options expiry today, Turd?
Well, in the on the COMEX, where paper metal is traded in New York, you purchase futures contracts, and the futures contracts are broken up by month. And there are a handful of months throughout the year that they call delivery months, and those are the ones where most of the trading volume is. One of the delivery months is August. And the August contract and the options on the August contract expire today. In fact, as we record this, it'll be in just a few minutes from now. There is always a certain amount of gaming by we'll call them the prominent traders of paper metal. Those are the big bullion banks. And it gets particularly pronounced right around option expiration as they take a look at the options books and try to figure out where they can inflict the most pain on the speculators. And in this month, it has turned out, it seems, that the pain was mainly inflicted on those who are short, as we've seen a nice little rally the past couple of days. It has done some pleasant things to the short-term charts, but as you know, we've been in this kind of decline and basing pattern for the metals, both metals now for, what seems like an eternity. And though maybe some of the short-term charts have started to look a little more friendly, we're still in a trading range, a base for both gold and silver. And till we break out one way or the other, everybody's just kind of sitting on their hands waiting to see what happens.
Yeah, well, summers are good for that too, because light trading normally, and you see people going on vacation, there's a certain percentage who are going to be away. So as a result, manipulation more prone to the summer as well, although I would say in this market, the manipulation is constant and ongoing and unceasing. But the fact that it's going up in the summer, we're also coming to the Indian wedding season for gold.
Yep.
And that's my way of thinking there. That could be enough to kind of upend the intermediate trend, because it's real hard for a commodity to go down and go down appreciably in the face of rising seasonal demand, right?
Gold and silver, being as grossly manipulated as they are, would be the occasional, I guess, counterintuitive part of that. Because you're right, where there is rising demand or less supply, that usually means a higher price, doesn't it?
Ordinarily, that's what they taught us in economics.
That's right. That's Econ 101, I think.
Yeah, right.
Unfortunately, if the market is manipulated, sometimes those fundamentals get drowned out. And that's what we're always fighting within gold and silver. And when I say that what we call the bullion banks, which are based in New York or based in London or even Deutsche Bank or UBS out of Switzerland, they tend to control the paper price of both gold and silver. We know that. We're onto their tricks. We know how they've done it now for decades. This latest move where silver peaked, I guess about 14 months ago, and gold peaked around Labor Day in the U.S. early September last year. Both of those peaks came as the bullion banks were succumbing to significant physical supply pressures and concerns. In April of last year, the physical market in silver was extremely tight, and we're getting close to a physical failure on the COMEX. In August and in early September last year, there was great fear on the part of the gold banks, because that was when the U.S. had been downgraded by S&P. We were going through the debt ceiling issues in the U.S., which are due to come up again, which will be interesting this fall. Nonetheless, the panic that set in amongst the banks is what caused then the declines that we're just now finally drawing to a conclusion. The banks have positioned themselves out of a risky position where the risk to them was price going up, and they've transferred that now to the speculators, the hedge funds, the momentum chasing computer programs. And now a lot of that risk of price going higher is now on the backs of these speculators instead, and that's where they want it to be. So we've worked this process. I think the metals are now poised for an extremely exciting and explosive move upward here in the back half of 2012. So everybody that's been patient and hanging in there and continued to stack their physical metal supply, I think is soon to be rewarded with a pretty dramatic move in paper price.
Yeah, I just talked with the folks over at Charles Nemmer Research, and they're thinking it's going to happen soon. They're a little disappointed because Barrick did not confirm the rally in the physical, and they like to see the stocks confirm. But, we'll see. That's not a hard and fast rule. We also saw Goldcorp's profit drop, but Agnico Eagle, we're seeing higher output, but their profit fell as well. So it's just a little bit of a divergence that might bang up, might nick the price. We'll see how far, if it dips again, it goes below that 1600 level. I think that's going to tell us the key, because if it goes there for a day or so, hits in the high 1580s, and then shoots right back up over the 1600 mark, we're going to know that the intermediate trend is reversed. The long-term trend, nothing's changed that, has it?
That's exactly right. And eventually that physical demand is what is causing this bottom in paper price and is going to eventually cause it to reverse. A lot of or almost all really, of the physical delivery of metal still takes place through London. It has for centuries. I have a number of contacts over there that I've been fortunate to build in my time as running, being this internet metals maven or whatever my title is today. My contacts in London assure me that physical demand for precious metal, primarily from the Far East. You mentioned India, but also China.
Oh, yeah.
Russia.
It's off the charts.
Japan. It's enormous. And what the eventual motive is might be a topic for another day. But what we know, what has been reported at least, is that China has imported well over 300 metric tons of physical gold already this year.
That's what they admit to. And just one other thing that is going to influence this, because it's a little known fact, but I had a guy on who's a big shot at the Perth Mint. We all know them, one of the top mints in the world.
Braun? Did you talk to Braun?
Braun, Braun. Me and Braun, we stay in touch. And what he explained to me is that if the demand ticks up a little bit, we're only talking a couple percent, 5-10%. There is no inventory of gold, people selling their gold back, selling their Eagles, their Krugerrands, their Philharmonics, their Kangaroos. So what happens, it's all coming out of current production. And current production isn't limited by the mints stamping the coins. It's the blanks, the planchettes that are used to make a finished coin, and the production bottleneck is there. They cannot produce enough of them in the event of a total, frenzy. Even if the demand goes up 10-15%, you will see shortages of bullion coins, and that is the primary means that most people invest. They don't buy bars, they don't buy dust, although I'd kind of like to get some gold dust. And they don't
sprinkle it around.
Yeah, hey, spread the wealth. And and they don't buy nuggets either. The primary means that investors invest in gold are through coins. Now, granted, governments will buy the LBMA bars, blah, blah, blah. Not relevant to what we're talking about, because when those coins get scarce, like Andy Schechtman at Miles Franklin said last week in Vegas, when those coins get short, then they go on rationing, the mints ration, and then the price just goes through the moon and takes everything else.
Well, Kerry, you and Braun are absolutely correct, and that's a very good point. And I would invite your listeners to think about this from this manipulation in price perspective by the bullion banks, because there's a lot of people that think that that's some kind of tinfoil hat conspiracy, but that plays right into the reason for the manipulation, because who is that retail investor in silver is a lot of times the regular person, or even smaller institutions or funds. What's kind of perverse about buying gold, or even equities or anything else, is how much people don't buy it when it's on sale. But while the momentum is hot and running, people tend to plow into it. Well, then there's a rationale right there for, again, if physical gets depleted more rapidly with a rising price, and the banking cartel knows that physical depletion is one of their biggest enemies, well, then keeping price down helps them control physical demand. And that's all part of why they do what they do.
Exactly. And it happens over and over and over again. We see it continually. In fact, the normal state of the market is manipulation now. The abnormal state of the market is allowing price discovery and prices to move freely, and purely as a function of supply and demand, which is why these freaking markets were created in the first place.
Right.
And now they've been seized, they've been perverted, and this is what we're left to deal with. Turd, we got to take off. Tell us where we find you on the internet and what you've got available.
Well, there are two different places. Thank you. TF for Turd Ferguson, which, as you might imagine, is not my given name. No,
really? Your mother didn't call you that?
I tell everybody that Turd is my mother's maiden name, and so that's why we use it. Turd Ferguson is actually an old character from a Saturday Night Live skit, and it's just an internet name that I chose a long time ago, and now I'm stuck with it. The free site where most of the activity happens, where you can find me almost every day, is TF for Turd Ferguson, TF Metals Report, one word. The neat thing about that site is we work very hard to make it different in that people treat each other with respect and civil. I teach my kids all the time, treat people the way you want to be treated. Well, that's, I think, rule number 7 in the guidelines at TF Metals report. So there's none of this, usual internet, I guess, mean-spiritedness that you find in other places. We also began just recently a subscription site, very affordably priced at $15 a month, called Turd Talks Metals, one word. And there I provide a daily podcast update, 15, 20 minutes. Usually it's just me, but sometimes I have interviews. We have other interactions with some of the other big people in metals, providing a little more, I guess, immediate access or closer access to some of the big shots in the metals. And so those are the 2 sites. We have a lot of fun. We talk about some serious issues, though, and help people prepare for what is most assuredly coming over the horizon.
No doubt, you're right. But that's for a discussion for another day. Turd, thanks so much for coming on to the financialsurvivalnetwork.com. You can hear this interview, plus many, many others that we've done with other noted luminaries in all aspects of economic research and science. Turd, we will have you on again. You be well.
Kerry, I look forward to it. Thank you.